In the 1990s and early 2000s, leading into the dot-com bubble and subsequent crash, there are many reasons as to why this happened, but one of them has been known as a market manipulating technique known as round tripping. Now, round tripping is where two companies or more would subsequently exchange goods or services or money for services. They would swap them, so to speak, to represent transactions, and those transactions would have a neutral of nothing. There would be a net of zero. This was known as all foam, no substance. Anytime we need to fudge the numbers to make it work, almost always is there going to be catastrophe to come later. The one that comes to mind most recently would be Nvidia's circular financing. And now this one has been circulating through the news for quite a while. And for those of you who don't know, Nvidia is essentially giving money to AI startup companies so that they can therefore turn around and purchase Nvidia's own GPUs so that they can kind of get started to advance their development. And then it's being marked as an asset purchase on Nvidia when in reality, it's just their own money coming back to them. CEO Jensen Huang was actually questioned about the circular financing, where him and the CFO had some things to say about that circular financing. They claim that they're not circular financing, they are announcing a revenue sharing structure agreement with a take or pay commitment structure with minimum revenues guaranteed. And their words are, this is their way to de-risk the AI data center build out while allowing for growth for the companies that are not necessarily the hyperscale. So they're calling this the double payout. They're gonna get the payout once when their actual GPUs and chips are purchased, and then once more when they enact a form of revenue share for the companies that they basically financed earlier. So what happens is Nvidia is going to backstop the data center build out by giving that financial guarantee. So Nvidia is essentially nodding their head to the bank saying like, yeah, we've got them. And so that way the banks and the private equity lenders, they feel confident that they can underwrite these startups for more money. Because of that guarantee, they are now requesting a revenue share of any cloud rental revenue that transpires because of it. Is they're going to start to target these high growth areas such as these cash strapped AI startup companies that are able to add highly predictable revenue streams. And their idea is that Nvidia wants more recurring revenue as opposed to just people purchasing their chips, their GPUs, their servers, their data centers, etc. They claim that this is going to massively increase their TAM, or their total addressable market, and they are going to drive multiple billions in recurring revenue. Let me know your thoughts down below. Thank you so much. Peace and love.